Hello, good afternoon. You're watching Closing Trades on ET now, and for now the market is holding steady. 22,300 thereabout is where we have pretty much been for the trading session today, and we are pretty much holding around that level right now as well. The good news is that all the sectors are actually trading in the green, so there's not a big red right now as far as the setup is concerned. The advanced decline ratio is looking quite healthy as well, and overall the momentum seems to be at least on the positive side. It's PSU Banks, Pharma as well as real estate pack which is leading the gain in terms of the key sectors. Reliance is holding its head above quite nicely ahead of its earnings later today, so it is holding up with a gain of around 0.4%. And from the banking space, a bit of a divergent move, while of course HDFC Bank is under pressure reacting to its earnings. ICICI Bank is clearly batting for the bull, so that's something to watch out for. And globally as well, in terms of the index moves right now, they are a bit mixed, and that's what we are also following, Aisha, for now. So not a big momentum here, but at least it's been pretty much around the 22,300 level.
Yeah, and it's surprising to see that the markets in momentum are doing actually really well across the globe. So look at, the UK FTSE, for instance, that's up a solid 1%, no less. On that base, there's DAX, of course, which is also in the green, but fairly tempered when it comes to a CAC, which is just about mildly soft. But anyway, that said, for our markets, there are a lot of individual stock-specific movers, while all eyes are what Reliance Industries delivers later today, post-market hours. This persistent Q4 earnings have been weak. The Q1 guidance as well has been weak, hasn't quite matched up to the street, and that stock is now at the session lows. It's a solid 9.5% gash that you're seeing on that stock. IREDA, of course, which has been a darling ever since its listing, that came out with its numbers in a healthy set. NII shot up about 35%, PAT uptick of about 33%. So that's gone down well with the street. And with the kind of run-up that the stock has seen since its listing, it's shot up another almost 7% intraday itself. Voltas, a mammoth upgrade. I mean, the stock has been doing very well off late, and UBS has upgraded it to a buy and also upped its target price all the way to 1,800 rupees, which indicates a solid 40% upside from the current market price. So the stock holding around that 1387 mark as we speak right now. And of course, the downer besides the IT earnings has also been GSPL, PNGRB reviewing the grid tariff, high pressure grid. It's been reviewed after a gap of about almost 6 years. The tariffs have been now cut by a good 47%. That's clearly not gone down well. You can see the brokerage reactions as well coming in by, and we will of course talk a little more in greater detail about that. We did have a chat with PNGRB as well earlier today. That stock hasn't seen any resurrection, has been gapped down from the word go. But yeah, I guess all eyes on the heavyweight earnings. HDFC Bank clearly couldn't do any magic. All eyes now, or hopes pinned on Reliance, I guess.
See, Asha, you have to take the market to Friday's panic low, and from there, if you really analyze the market, it is in a fine, fettle, so to speak, because the recovery has come at levels where it mattered. It has come on a news which has disappeared, and it is backed by a bout of short covering, which is relevant and important in the near term. I think this week it's about global. This week it's about numbers. This week it's out about are we likely to escalate from levels from where we found support. Reliance numbers are crucial given the fact that it's been in performing stock and expectations are not something grand. So when a performing stock comes out with good set of numbers, then if the underlying fabric of the commentary is decent, it could add easily. It could easily bump up the Nifty by a couple of points, and that in a sense could really give Nifty that much needed elevation. So purely looking at the positioning of the market, I guess Reliance numbers, not in terms of a directional move, but purely in terms of the technical setup, I think is crucial and it is important. The other talking point I think is breadth, which is worth really revisiting. The small cap index is not far away from its all-time high. And how much are we away from an all-time high, Kunal?
On the Nifty?
Small cap index?
Check that.
5-7%, I'm guessing?
No, less than that.
No, I think less than that. Yeah,
2-3%.
it's around 200 points.
Yeah, that's
it.
Yeah, 691, 468.
So that's what 2%.
1.5%.
1.5%. Now just imagine the sell-off in the month of March has left a lot of bitter aftertaste, and markets have gone back to those levels. And honestly, hand over heart, if you ask anybody that what are commitment levels between Jan, March and April now, the commitment levels in the small cap space by margin buyers and by HNI investors, they have actually diminished. So what do we have? We have a sizable rally which has come back. We've reclaimed the recent highs of the March, and the participation is just not there. So global cues stabilize, which last week they were not because of geopolitical issues and because of Fed. And if markets stay where they are, then you actually will see the FOMO crowd coming back. The FOMO crowd last week did not make a comeback, but the FOMO crowd will make a comeback when they're convinced that world is okay, geopolitics is behind us, Fed rate cut regime is in the price, and markets are holding on. So are we at that level in the small and the mid cap space where FOMO crowd will come back? Let's hope so.
Let's see whether that FOMO crowd comes back or not. Just wanted to highlight what's happening to Tejas Networks actually. That stock has suddenly seen a very sharp spike. Let's pull up that stock and see what's happening there. So that's the reason perhaps
I don't know
the
whether they've
street.
come out or not, but numbers are due today. I was reading the sheet in the morning.
No, I think that is the numbers are not out yet. Maybe the street is factoring or smelling something there because that stock is fairly active ahead of that. And then, of course, Persistent System, which is now down in that temporary circuit, it's down 10%. Naresh, comment on the chart of these two names, Persistent as well as Tejas.
So Persistent has, in the short term, made a top wherein the stock has been declining for the last almost 1 month from a high of 4,400, has slowly drifted lower. And the rest of the names had already topped out quite some time back. And Persistent was one of the best performers in the mid cap, small cap IT space. Over the last 1 year, the stock has gone up from 2,000 to almost 4,400. So the next support for the stock is closer to 3,300. So I would wait it out, not say venture in as of now.
Okay, that's the take coming in on Persistent. Let's bring on board Deepak Shinoy as well. Deepak, hi, afternoon. We were just calculating, we're just 1.5% away from that all-time high on small caps. And to think of it, the sell-off in the month of March was all driven and concentrated within small caps. But do you think this, the FOMO crowd has already made a comeback?
It seems to, Aisha. In fact, I think where we are right now, we've seen a lot of the earnings still yet to come. So I think a lot of stocks will react after results. To be fair, I think markets have seen a lot of retail participation. Last month, it was mostly FI participation. This time, it's more retail. That's on the buying side. So, well, time will tell whether these all-time highs will hold. Usually, markets tend to go up in the long term. So, all-time highs are always broken. Whether it happens now, 6 months later, I can't.
Taken. I think we do have you on a bit of a bad line, Deepak. We'll try and reconnect with you. But in the meantime, wanted to highlight Vodafone IPO, Vodafone Idea FPO, that is, because that seems to be fully subscribed. In fact, it was 2.9x now. Retail is not fully done yet, but I think QIB is clearly showing a lot of interest, and ditto can be said about the HNI as well. So the retail, I think, is still below 0.6, 0.7x. On the charts, of course, we are seeing a bit of a reaction and an adjustment happening given the fact that the price range for the FPO is 10 to 11 bucks, whereas the stock is trading still above that 12 rupee mark. So there was a bit of an adjustment there. But other than that, GSPL is the other one wherein the circuit opened on heavy volumes. Remember, it opened with a bit of a gash down. It was down 20% for the longest time. But then the circuit opened in the last few minutes, in the last few hours. But the stock is just between that 16 to 19% mark. Kunal, your view on the charts of Vodafone as well as GSPL?
So GSPL, I think after today's sell-off, the stock would take a lot of time to stabilize because what the stock has done today is managed to break below the 200-day moving average after remaining above this critical moving average for I think the last 4 or 5 months. I think December or November second half is where the stock had actually broken past about the 200 DMA after a mild correction. So I think it's now reversed the entire course for itself, and this could probably be a point where the stock may correct and I think even come back to 280, 265 kind of a level, which was the previous major swing lows. Vodafone Idea on the other hand, I think the stock has bounced off quite well from the 200 DMA. It's retraced from 15.5 odd levels to now 12, 12.5 approximately. That's the range. It's almost like a double bottom formation for the stock on the charts, on the short-term chart. So not initiating a buy, but I think possibly if the stock comes back about 13.5 levels, which is a breakout zone, that's where I would probably believe that momentum could come back again for Vodafone Idea.
Right. Deepak, what's the call on the Vodafone FPO? Worth a shot?
I definitely, I have a problem with Vodafone in general. I think we've got an issue with what their cash flow situation is. It's a lottery ticket in the form of a Supreme Court case where they will hear whether Vodafone is actually supposed to pay all these AGR dues. But if you take that out, there's a 30,000 crore payment coming next year after October 2025. There's a 40,000 crore, 43,000 crore payment every year after that for 5 years. And this is a company with negative equity. They have more than 1,60,000 crores negative equity. We will therefore, I think, see challenges in terms of cash flow in the next year. Whether this FPO goes through or not, the long-term approach over here would be they're going to need capital. Birla is putting in just 2,000 crores. Vodafone is putting in nothing. The government won't support it beyond a certain point. I believe here we have, there is a problem over here, and I don't want to take that risk.
Just think about it. If you're buying Vodafone Idea, what are you actually buying? You're just buying a hope that things will stabilize. So surely from an existential crisis, they will come out. If they are able to reduce debt, which they will, and put money back in capex, the relevance of the company when it is a weak number 3 could become a strong number 3. They're not going to become number 2 or number 1. And if you are a minority shareholder, you would say, what am I getting in return? I'm getting a very diluted equity now. Now you could conversely look back and say, at 10.5 rupees, if you apply for the FPO, which is at a discount to the current market price, you actually have very little to lose. And if the enterprise value goes higher, which is the company, debt plus equity. Equity is the money which you get from shareholders. Debt is what is from the bank. If equity values goes higher, the market cap will go higher. Now that's a judgment call whether you want to buy it or not. But I'm saying that if you're buying Vodafone Idea, you should just remind yourself that it is almost like buying a stock at an option value. It may go up 50%, but if it does not go up, the chances of losing money from 12.5 rupees, I think will be significantly higher. That's my limited point. So Kunal, now you're getting the share at a discount, which means in a couple of days the allocation comes to your demat account. You will get it at sub 11 rupees.
Yeah.
So does it make sense to short Vodafone Idea? Because you will get the allocation. You pretty much know that which way the FPO is moving.
See, that arbitrage has already happened for Vodafone Idea because the stock in the last 2-3 days, the futures has already gone into a corrective phase. I think 13.5 is where the stock was 3-4 days back. Now we are almost at 12.25 for the stock in terms of the future. So I would probably believe that arbitrage has already happened. What now matters is that if the stock is getting into an uptrend, which are the price points, which are the levels which makes a lot of sense to try and buy and expect that the stock would get into a breakout. That I believe could be the first important resistance point, which is 13.5, 13.75 for Vodafone Idea. So I think below those levels, the stock may try and just about languish like what it has been doing over the last few weeks. But I think above those 13.5, 13.75 levels is where I would believe that there could be a significant bout of momentum.
Deepak, do you track Persistent Systems closely? Did you find the results and the commentary disappointing as well, the way stock is reacting?
We own a little bit, so little biased here. But the results are okay. 25%, 13 or 14% annualized revenue growth. I think the stock ran up a little bit too much, perhaps, and therefore is correcting on valuations. But I don't see anything really fundamentally wrong. I think all IT will suck for most of this year. They will not create great returns. I'm okay with that because you have to have periods of downs, consolidations, all that stuff happen. A large part of what's happening in the IT services business is related to business changes within the US. Companies themselves changing. They're not hiring for the most part. So there is a cost consolidation happening. And finally, eventually, as some of the other areas from AI to a bunch of other services around, I think they will start.
Taken. In fact, we did listen into the con call earlier today, and the management did say that FY25 margins are going to be at similar level or very range bound in FY25 as well as it was the case in FY24, while Street was penciling in an expansion in margins and hence the disappointment. Listen into that management take.
our EBIT margin for the Q4 came in at 14.45%. The Q4 EBIT margin was in a narrow band compared to the last quarter. This was on account of ramp-up of larger vendor consolidation deals that we won over the last couple of quarters with a relatively higher on-site proportion to start. The ramp-up in this quarter included a one-time transition cost along with lower utilization and higher travel cost. This impacted the EBIT, which was compensated by a reduction in earnout liability with respect to one of our acquisitions that did not perform in line with our business case. Sunil will provide more color on the EBIT margin movement later in this call. During the next 12 months, given the challenging macro environment, our goal is to maintain top quartile growth while maintaining margins at the current level. We'll be working towards improving utilization, on-site offshore mix, and other operational efficiencies to ensure we keep moving towards our medium-term target of improving margins by 200 to 300 basis points over the next 3 years.
Back with closing trades right here on ET now. Metropolis, that's the one which has shot up quite nicely. A good 7.5% move is what you're seeing on that stock. There's ABFRL as well, going strong by 4%. That's the other buzzer today. Look at Bandhan Bank, pretty much undoing all of last week's damage. 4.25% higher on this stock as well. Exide has really been on a tear. Almost on a daily basis, it's been perking up and hitting fresh life highs. Another almost 6% of a move coming in Exide today as well. And Voltas, of course, after that upgrade coming in from UBS, that also holding out well. Kunal, let's take a look at the charts of Exide as well as Metropolis both.
So Metropolis, Exide, of course, the stock has done exceptionally well post that news flow for the stock, and I think the move for the stock started off when the stock was almost at 320, 330. Remember, towards a point when the stock had moved up to 400 mark, now comfortably above the 450 plus levels for Exide. So I think the stock has done exceptionally well. It's almost 50% up so far in this series, and I would probably sense that this could be a precursor of a strong up move going forward. Now, I'm not sure whether the stock would probably get into a much more stronger follow-through up move next series as well. Typically, we see that after such kind of move, these stocks they generally tend to consolidate into a narrow band. So my sense is 450 could be acting as a pivot range for Exide, and maybe the stock can fluctuate into a 10% band from that 450 odd levels. Metropolis, on the other hand, I think after the last 3 days of sharp correction prior, I think from 1850 mark or 1900 levels, the stock had fallen down to sub 1700 mark. Now on Friday, what had happened was the stock had gone to a significant discount in terms of the futures. So the futures was almost at 1650 levels, and the stock had crossed the 1720 plus mark on Friday, and that discount is getting narrowed today. And that's why I would believe that the stock could actually be one of the better moving names going forward. The breakout point for Metropolis is around 1850 levels, which is the previous swing high on closing basis. So I think a crossover about those levels could lead to at least another 10 to 15% upside.
Morgan Stanley also has initiated coverage on diagnostics, right? One of the reasons why the stock is actually perking up. On Dr. Lal, they've initiated coverage with an overweight. For Metropolis, it's an equal weight. And they're saying that expansion is easy. It's about profitable growth and profitable scaling, which is the biggest factor to watch out for. Deepak, any thoughts on the diagnostic space?
We like it. It's been an interesting space because I think diagnostics itself is going to change dramatically. Especially when you have, the logistics and transportation, and perhaps at on-premise or remote level diagnostics possible with new technology. I'm sure we'll have a lot more. For instance, in India, ultrasound machines are regulated in a very big way. They're used for gender, checking before birth, but they're also useful for a whole lot of other purposes. As we mature as an economy, I hope we will have more establishment of ultrasound centers, and therefore it will benefit a lot of the diagnostic centers, at least the chain going forward. But these are long term games, so you'll take about 10-15 years for many of these things to evolve. Meanwhile, we are seeing a lot of competition in this space because the hospitals themselves are becoming places for diagnostics and also establishing their own diagnostic semi-centers, if you may. So that might be one reason why a pure play diagnostic chain may not be as attractive as a hospital chain by itself.
But Deepak, this is a space where peak growth is over post-COVID. This is a space where growth will be 12 to 13%, 14, 15% maximum. That also includes acquisitions. Competition is intense. Price is coming down on a daily basis, and all of us get one or two messages directly from either an hospital or a diagnostic firm that you get your full body examination and you'll get 50% off. So I'm just wondering, where is money to be made for shareholders? As a prospective patient or somebody who wants to get his body screening done, this is great news. More competition is less money. But for shareholders, more competition is always bad news.
Yeah, I mean, the idea would be if it becomes affordable, people will have checkups done more frequently. And I think in general, India does not get diagnostic checks done very often. We often think that we're healthy, and therefore, as more and more of these issues get obvious, that there are silent killers in the form of, say, inflammation, in the form of other pre-diabetic, indications. I'm hoping at least here the relatively mid-affluent or early affluent class will be getting a lot more tests done. I don't believe there's a lack of growth in this space. You're right, 10, 15, 20%, maybe the growth rates of the industry as a whole. But I think the problem with competition is that it's going to be spread across a very large set of beneficiaries, and one winner takes all, or even two or three, a duopoly, triopoly. It's not going to happen. So therefore, there's no easy pickings here. I'd rather pick the hospitals because they will do multiple parts of this value chain, not just the diagnostics.
Another stock which is worth revisiting, I think, is Loris. It's having a good day. Exide is like on a different tear. Biocon is making a comeback. That's looking decent. You've got Bajaj Finance. Numbers are due this week. That's holding on very smartly. Bandhan, the CEO and founder's exit, Mr. Ghosh's exit, did create stress on the stock, but that stress lasted for a very, very brief while. Aditya Birla Fashion, Aditya Birla Finance, they both are doing okay. If last couple of years were really dominated by Tata's and the Adani group of companies, could it be JSW, Welspun, and could it really be Birla group of companies going forward? The price action is telling you something very different, but persistent is where there is no recovery whatsoever. Madhav, Indigo is again gaining altitude, 3,700. Deepak, there are plenty of reasons why you should not buy airline stocks. But Indigo has gone from 2,000 to 4,000. Why is that?
I think, honestly, right in front of our eyes, we've seen Jet effectively, go to zero. We've seen Go Air vanish without a trace, and almost SpiceJet not quite as well. The new entrants in the space, or the new entrant, we've seen them also struggle. Vistara and Air India are probably going to be one, so they're going to have integration issues while they go forward. They're the only ones that can actually provide competition. So effectively, we have a two-player race here, and to a certain extent, I think Indigo's relatively high focus on efficiencies have helped them now. The problem with Indigo is that to a large extent, a lot of their profits seem to come from crude prices, which have been stable. So that's why they're able to make a lot of profits. But in the last decade or so, whenever we've seen crude prices spike up, Indigo's profits have gone, just like almost gone to zero and all that stuff. And that is a case where I would say, if that is the risk that you're playing in, then you should play the stock as a momentum stock, not really a long-term story, because the pricing power simply does not exist, or did not exist in the past. On the pricing power front, travel and hospitality has really, really increased in the last year or so. So something there fundamentally could have changed. I think, I don't have an investment in airlines or in Indigo in specific, but I do think useful place to watch. I may be wrong in not having invested, but I'm invested in the hotel space, so kind of making up in that. It'll be interesting to see how the last quarter results will be. I don't know if they've come already.
Okay, point taken. So that's the view coming in on hospitality, aviation in particular. But Kunal, what's the view on ICICI Bank versus an HDFC Bank? One is clearly batting for the bulls with a gain of almost 2%, but HDFC Bank just refuses to move.
Yeah, refuses to move. The stock has failed again to cross over the 200 DMA and missed it, I think, by a margin of just 0.5% or so. But I've seen this historically that whenever a stock attempts the 200 or a key resistance point for 3 or 4 times, eventually those resistance points, they generally get taken out and you see a start of a fresh uptrend. So as of now, it's more of a wait and watch for HDFC Bank. That 1550, 1565 odd levels is a key resistance point now for the stock on the very, very short term charts. So we may just expect the stock to just languish into this mild trading range around the 1500 as a support or a base for the stock over the near term. But ICICI Bank would be an interesting play because the stock, I think last week or the week prior to that, had shown a potential or had come closer to a potential breakout above 1120 levels. All of a sudden, the next subsequent 3 days, the stock had fallen down to 1070 mark, breaking below the previous swing lows and now managing to rise up higher. So when we look at this, the stock has given a whipsaw move twice in the previous swing breakout as well as a breakdown mode. So now, whichever way the stock breaks past, or whether it breaks below the 1060 mark as a support or above the 1120 mark on the resistance side, I would actually expect that the stock could get into at least a 5 to 10% swing in that direction. So we'll have to be a bit more patient over here, and a breakout above 1120 mark I think could take the stock significantly higher from those levels.
Right, okay, that's the comparison between ICICI Bank versus HDFC Bank. But Deepak, before we let you go, anything that you may have bought in the past month or so?
So we have done very little buying really, waiting for results. But I've got a little bit more into the power transformer space, a little more into the hospitality space, like I just mentioned. We're adding on to our current holdings for the most part. Especially we did a bunch of extra buying in some of the smaller caps which had fallen last month. Though, of course, you can't call BSE a small cap anymore. It's now a mid cap, but it did fall about 30-40%, and then we'd added more stake in that. We're very interested in the financial investment slash insurance kind of space, where we feel there's a lot more assets are going to get created. India is going to move to from about 15 to 17% of GDP in mutual funds today to and to about 25% in mutual funds, and perhaps a greater percentage of the stock ownership, which is currently only 9%, held by retail. So buying a few stocks in that theme as well. But again, when results come, we might change and add a bunch others as well. Nothing's super exciting right now, but we'll wait till all results are in.
We'll chat again then and see what the revised list looks like. But Deepak, thanks as always for taking the time and joining in.
Thanks.
Okay, let's get in some closing trades as well on that note. Just half an hour to go before we wind up for the day. Kunal, what's your list?
So L&T is something which is looking attractive. On Friday, the stock formed a bullish hammer pattern, and today the stock has seen a breakout move for itself post that strong candlestick pattern. So I would expect this to be a major bottom, at least from a short-term kind of a view. So L&T is something which I'll go for.
Okay, Kunal, what about your closing ideas? Or rather, Naresh, what about your closing ideas?
Continue to have the bullish view on Crompton Consumer. The stock has shown relative strength over the last couple of weeks. Available at the same pre-COVID prices, turning around, and the whole sector has turned around. We've seen what happened with Voltas. So this looks promising at current levels, could actually cross above that 320.25 and create a new trend altogether. So a preemptive buy here at current levels.
Right. Okay, we'll take a very quick break on that note. When we come back, we'll discuss some of the other buzzing ideas with our next expert.
Gurmeet Chadha joins us, and let's take a conversation forward. Gurmeet, looks like the decks are clear for some more elevation for the market. Geopolitical concerns have settled down. Markets, in a sense, have taken the Fed communication into their stride. And the numbers which have come out, whether it is from TCS or for that matter HDFC Bank, they do not spark too much of nervousness. Okay. 2317 for the Nifty. So Kunal, are we looking at big 1,000-point rally now? Has that started according to your data?
Not exactly, Nikunj. It's just that the mid-cap end of the market is looking a much more buoyant this time around. So that's the only change. That you're seeing the mid caps and the small cap indices a lot more better. So the point which you were mentioning at the start, my sense is that the prices may have bottomed out for mid caps and small caps, but the sentiment is not yet bottomed out, because there are when we see the risk appetite and the IVs for many of the mid cap odd names, it's still a bit, on the, lower side, and that generally indicates that maybe the risk on sentiment is not as back in terms of the mood of the market. But the prices have definitely made a comeback. Many of the stocks in the mid caps and small caps are actually making strong breakouts for themselves. You're seeing those double-digit up moves coming back into those mid-cap, small-cap into the market. So I would probably want to concentrate more on the stock specific as of now, because Nifty is still not out of the major hurdle, or at least a first major hurdle for itself, which is around the 22,500 levels.
Right, okay, just analyzing some of the other movers in trade, and OMCs are having it good today. So BPCL, even though it's come off a little bit from the top of the day, I think still going strong by a good 3.25%. Axis Bank has made a very strong move, a good 2.5% higher. Kunal was highlighting L&T just a short while back. That's going good, another 2.5% in trade for this one as well. And Bajaj Finance is seeing a nice follow through from its price action on Friday. Another 2.5% for bump up coming in for Bajaj Finance as well. In fact, Naresh, I want you to come in here on the charts for Bajaj Finance as well as Axis Bank both.
So I'll start off with Bajaj Finance. Now, this has finally started looking interesting because after a long time, the stock has started showing relative outperformance. And the bigger problem in the long-term charts has been that a market 8,000 where it has not been able to cross. So that is what we see next eventually. But in the short term, we've started seeing reversal both in Bajaj Finance as well as Bajaj Finserv. So out here, it now becomes a buy on dips with a stop loss below 6,800 and upside towards 7,700 to 8,000. Then going to Axis Bank, now this stock has been making a lot of whipsaws over the last 6 months. Every time it goes to 1,030, the stock reverses back. On the upside, 1120, 1130 is the upper band. So this has become the band for the stock. Once it sustains 1120, that is where we call the trend has finally got into momentum, but still has been a relative outperformer compared to the HDFC and Kotak as such.
Okay, point taken. And Axis Bank, of course, will be in focus this week on account of that fundraise. Remember, last week the stock was fairly volatile, wondering whether there's going to be any equity dilution or not, but that's something we'll get to know on April 24th. But what we are watching out for today is, of course, Reliance Industries earnings. So let me take it across to Somit to get a sense as to what we should expect from the numbers. It's expected anytime post 7 p.m. today.
Well, for Reliance Industries, on a consolidated basis, overall stable set of numbers are expected. Revenue and EBITDA are expected to be higher by around 4 to 4.5%. Net profit is expected to be higher by around 5 to 6 odd percent. Segment-wise, if you see, in fact, EBITDA, if you see, the company is expected to report its highest ever quarterly EBITDA, and this will be purely aided by the O2C segment, that is the oil to chemical segment, and also the telecom segment. In the oil to chemical segment, if you see, the EBITDA number is expected to be 13% higher on a sequential basis on the back of higher refining margin, higher throughput, and because of better petrochemical spreads. Now, throughput is higher because in the third quarter, that is the base quarter, the company had a planned maintenance shutdown, and hence we are seeing such kind of an up move on the numbers. When it comes to the retail division, the revenues are expected to be higher by around 1 odd percent, but on the EBITDA front, we are seeing a decline. But do remember, the base quarter, that is the third quarter, was a seasonally strong festive quarter, and hence we are seeing such kind of a decline. On a YY basis, if you see, the retail segment continues to grow for Reliance Industries. When it comes to the oil and gas exploration business, there the EBITDA is expected to decline by around 3 odd percent, and that is because the gas output and gas prices were pretty much stable, but government's profit sharing had increased on a sequential basis, and hence we are seeing this marginal decline of around 3 odd percent. And lastly, when it comes to the telecom business of Reliance Industries, there also what the growth that we are seeing of 2.5 to 3 odd percent is purely on the back of higher subscriber addition. Subscriber number for Reliance Jio is expected to be around 48.1 crore as against 47.1 crore that we had seen in the previous quarter. And because of this subscriber addition, we are seeing the pure growth of Reliance Jio Infocom. On the other hand, if you see the company's ARPU, they are expected to be pretty much stable at around 181.8 rupees per user per month. And do remember, this is the 8th consecutive quarter where Reliance Jio is expected to report a subscriber growth. Now, key things to watch out for from earnings would be their outlook, the capital expenditure outlook, when they're expecting tariff hikes to come in, and what is the capex plan and monetization plan when it comes to the new energy business would be important to track from Reliance Industries earnings today.
Okay. A lot of mid-cap stocks today. Gurmeet, the small cap index is less than 2% away from its all-time high, and there is no participation, there is no excitement, there is no euphoria. NAVs are down, but the index has gone up. So for an index which 45 days ago was supposed to be in a bubble zone has recouped everything it lost.
Because that's the probably the nature of the beast. I think small cap index, you can have one days where you can lose 6-8% in a day. We've seen that in November. We saw that when SEBI initiated the stress test. Also, as a category now, if you see the small cap AUM, it's almost 2.5 lakh crores. In fact, some of the funds, the large funds like Nippon or SBI, they're individually like 30-40,000 crores each. My sense is I see there are a lot of pockets where we are unable to justify valuations, but in a bull market, you stand to be humbled by the market. But I think that's a space you have to be very, very selective now. So there are pockets where you're still getting good businesses at 20 odd times, 15 odd times, which you can look at. And there are pockets like EMS or some proxy defense and space names, some PSUs which have just run up because the PSUs are running up. But it's very difficult to justify valuations. So you got to be a little selective here because that's where the accidents are likely to be happening. I would be a little more biased towards large and maybe large mid caps in terms of incremental allocations.
Okay, so that's a take coming in on some of these top buzzers right now. But PSU banking space is also fairly active, apart from, of course, Voltas, which has been going strength from strength. This is going to be a very good season for them. We've already seen that 70% plus kind of growth that the company reported in the quarter gone by. And that was just in terms of preparation for summer. When the summer onset has actually begun in Q1, maybe the momentum will even be stronger. That's what the street is penciling in. But in the meantime, Kunal, from the public sector banking space, which is your top sectoral gainer right now, the likes of Union Bank, Bank of Maharashtra, Central Bank, any name that you would want to recommend for a fresh trade?
So Central Bank is something which looks attractive. 63, 64 is where the stock is trading right now. I think more or less the chart patterns for many of the PSU banking stocks in the mid-cap end of them is very, very similar. These stocks have gone through their fair share of uptrend in the second half of 2023 and the first couple of months of 2024. From there, these stocks went into a 30% odd correction. Some of them, the low beta ones or the more formidable ones, went to just about a 10-12% correction, the likes of Bank of Baroda, Canara Bank, etc. And then now these stocks are coming back into a breakout mode. So I think Canara Bank and Bank of Baroda, of course, and the more formidable ones are the ones which are looking more durable. The charts have been more sustainable for themselves. But even the mid-cap end of the PSU banking lot are now trying to make a comeback. I think time and again these stocks have shown a lot of resilience for themselves as well as a potential breakout above the 65, 66 mark, for example, for Central Bank. Union Bank also very similar. Bank of India is another chart which has been looking quite attractive. I think closer to that 140 plus mark has been a key pivot support for the stock. So the entire basket looks attractive, and I think it's now in terms of the beta nature as well as the portfolio positioning for each individual. For a high risk trader, I think you can probably bet more on the PSU banking, the mid cap end of the PSU banking lot. And for the more conservative individual, I think SBI, Canara Bank, Bank of Baroda still offers a good margin on the upside.
Okay, let's just bring out the stock price of Zomato as well. That stock is holding up a solid 2% right now in trade. In fact, they've increased the platform fee by 25%. That doesn't quite equate, like Anisha and I were just talking, in terms of a consumer, you don't have to pay much, but at a company level, surely it definitely adds up. So good going for Zomato. It's on its way once again to move to that 200 rupee per share mark. But Gurmeet, what's the call on the stock right now for those who are looking to perhaps add on at these levels?
No, I think we're pretty constructive with the pace at which they are achieving their EBITDA guidance. I think they are likely to meet it ahead. In fact, they guided for turnaround in Blinkit. I think that's something which has been a dark horse. I think the mix is changing. There are a lot of high value stuff which is getting added on quick commerce delivery. The contribution margins are up in the food business. Blinkit is also showing great GMV. My sense is, and mind you, Zomato has its own fleet. My sense is, a third model can also be pivoted, either on logistics or something else. And plus the kind of data they are sitting on in terms of the consumption pattern. So I think I just hope that, the capital allocation stays on track and Blinkit achieves. I personally think Blinkit could surprise more in coming 2 or 3 quarters. The only risk I see here is that your margins take rates are 20 to 23%. I don't know how long you can sustain 23% kind of take rates in food delivery. ONDC does that at 5-6%. Too small right now. But that could be one disruption there which could happen. Already we have seen instances of when you order food on Zomato, you get pamphlets, restaurants asking you to order directly and take more discounts. At some point of time, I think this 23% take rate could be challenged, and that's what the company needs to be prepared for in terms of lowering it, and probably trying to do more value-added stuff.
Point taken. Separately, take a look at the stock price of Thermax. That's coming under pressure, down about 5%. JNK India, the new IPO is starting today. Maybe that's the impact that we are witnessing, because, of course, in terms of valuation, JNK India comes in at a much cheaper value versus Thermax, and it's direct competition between the two companies. So maybe there is going to be a bit of a pair trade with people moving out of Thermax and playing it through JNK India. That's what at least the stock price is suggesting at the moment. Brigade Enterprises is cooling off as well. It's down about 4%. And then, of course, on the gaining side, Triveni Engineering, that sugar name is fairly active today on a on a sugar rush per se, because it's up around 11%. But let me take it across to Ansh to get a sense as to which are the other price volume buzzers. Ansh?
Right, so Voltas will be the first stock in focus, which even you were mentioning right now. So as you can see in the chart as well, the stock has actually given a breakout from its flag pattern, which usually is a temporary consolidation in a strong uptrend. In addition to that, the stock has also touched a record high level. Apart from this, Aditya Birla Fashion will also be in focus, as the stock has given a breakout from its falling wedge chart pattern with volume of over 2 times its 10-session average volume, indicating good participation in today's up move. Lastly, Indiabulls Housing Finance will be in focus, as the stock has given a breakout from its downward sloping resistance trend line, surpassing above its 20 DMA level. So keep an eye on the stocks.
Okay, Ansh, thanks so much for that. We'll watch out for that. But HDFC Bank, that continues to be under pressure. Let's listen in to what the management had to say in their conference call.
Our focus is on the fundamentals, right? That's how stepping up and enhancing customer engagement, keep them engaged, and that's what gets those deposits. And it's not that we have anything, it's the customer behavior that drives those deposits. And those fundamentals are intact, and that's what operates. And when the market opportunity presents itself, like it presented in this quarter, you see those balances. There are some seasonality to it. We are competitively positioned in the market, and we are not leading with price to bring anything. So that's something to keep in mind. So it depends on how the market interest rate moves on the deposit side. On the yield side, we are not endeavoring to give loans at a lower rate. The objective there on the lending side is that the right quality of origination at the price point that we like. That's where we approach. Depending on the mix of products, that's what determines the margin ultimately, because we price the cost of funds into the yield. And so to the extent that the mix of the products remains stable, you see that the margin is stable.
Right. Have to ask you, Gurmeet, what is it that you made of HDFC Bank's numbers? You track it pretty closely. I mean, the management compared HDFC Bank's journey to, the Mumbai Trans-Harbour Link, pretty much work in progress. So, sorry, Coastal Road, I stand corrected. So, I don't know which way to look at it. Convenience brings in speed and, development into HDFC Bank's journey, or work in progress?
I would say the results were steady, but I was a touch disappointed with the management commentary, to be honest. I think the street, at this point of time, you got to be a little more, constructive in way credit is playing out. So look at, for example, on deposit front, they've done very well. I think they're almost garnering 24-25% market share on incremental deposits, almost 1.7 lakh crore deposit mobilized. The CASA also inched up gradually. The NIMS also probably seems to be finding a bottom at about 340, 350. And at some point of time, this credit deposit ratio, which was 80% before merger, would eventually come, maybe 3 quarters from now. It's already at 103, 104. But on the credit side, while retail has grown like 3-4% quarter on quarter, the commercial and rural bank, loans have grown 3-4%. The corporate loan book, degrew at 2%, which I think to me is a little surprising. And that is where the market is not very, very, it's given a little lackluster response. Had the credit growth been a little better, I think it would make sense. So I think we need probably, maybe it's got to do with the change of leadership. You have core finance guy leading the bank versus Aditya Puri was more a banker and a business manager. Maybe it's got to do with that. But you don't get 4 book value for growing credit at pace you are growing. Then you will only get 2 book value, which is what HDFC is right now. Imagine, I would have never probably thought ICICI would trade at a premium than HDFC, right? We are seeing that now. So I think the credit growth also needs to come back along with deposit mobilization. It's a tough job, but as you rightly said, it still, I think, is work in progress.
Battle of HDFC Bank versus ICICI Bank or TCS versus Infosys has been ongoing, and it seems like that in both the sectors it's shifting a bit. But Naresh, what's your view on the charts of Triveni Engineering as well as Sterling Wilson Solar? Sterling Wilson Solar did hold a con call today, and they talked about how revenue execution can be to the tune of 8 to 9,000 crores. They're expecting orders from Reliance as well as that Nigerian company within the matter of few quarters. But on the charts?
So Triveni is a one-day move as of now. We've not seen a similar move in the sector, so I'll wait it out because this is sugar as a sector generally moves out together. SW Solar is interesting because it has had wild moves before. So the stock had gone from 300 to 400 back to 250, and in that recovery from October lows went to 650. So the last breakout for the stock was at 400 to 450 levels, which was also the high in 2021. In this dip, the stock made a bottom around that 450 to 470 mark and is now setting up for a fresh breakout. Sustaining about 650 would imply the stock is about to cross the resistance which the stock faced after the listing around that mark back in 2019. So technically, the long-term structure is positive. It remains a buy on dips between 550 to 600 with a longer-term view. Because when stocks come back and cross 5-6 year highs, they tend to surprise on the upside. So looks interesting. Would be a buy on dips.
Right, a buy on dips coming in for Sterling and Wilson right now. Just a bunch of other movers in trade. Interglobe Aviation, we were just chatting about that stock. It's shot up a good 5% now. It's sitting at the high point of the day, so look out for that. Voltas is now putting on more weight, another 7% or rather 7% of a move is what you're seeing on the stock. And of course, Bandhan Bank as well is going very, very strong in trade right now. A bunch of other movers. There's ABB, which is higher by about 3.5%. PNB has done very well today. There's Havells, which is up 4% in trade. Canara Bank, wherein I think, there's a stock split which has got announced. Another 4% of a shot up coming in there. And Hindustan Copper has been a very strong one as well. That also puts on another 4% of weight in today's trading session. United Spirits, nicely chugging along. Crompton, LIC Housing Finance, there's MFSL, there's MCX, there's Polycab as well. There are some reports which are indicating that perhaps a price hike may be in the offing because of copper prices now being at a life high. So 3% of an uptick is what you're seeing on Polycab, SBI Life, Pidilite. It's quite a buoyant market right now. But Gurmeet, given that we are now going to step into the thick of earnings, right? Today you've got Reliance coming out with its numbers. From within the small and mid caps, any specific pockets where you think an earnings surprise could come in?
Selectively, I think we are tracking textiles. I think a lot of players like Gokuldas who have done acquisitions, added capacities. They're purely US dependent. I think we're trying to see if there's some traction building up in EU as well. They did two very good acquisitions. Had got re-rated from almost 400 to 1,000 levels, has come back to about 800 odd. We are looking at some defense and space names like Zen Technologies. Zen is more into simulators as well as anti-drone system. Would like to see what is the order book like, what's the guidance because of the situation unfolding. And we're also trying to do some bottom fishing in chemicals, see if that the inventory destocking is complete. Can we look at a better guidance? What's the pricing looking like? Or there are a few more quarters of pain. You got to be more chemistry specific there rather than generalize the entire chemical space. We'll probably look at fine organics, Tata Chemicals, a few couple of names there, and also some of the PSU names. We are trying to look especially on the energy side.
Point taken. So that's the view coming in as far as some of these stocks are concerned. But Tata Consumers is also in focus. It comes out with earnings tomorrow. If we can, let's go across to Vidhi to get a sense as to what the expectations are, because it will be one of the first company from the FMCG pack which will be reporting numbers. But in the meantime, Kunal, a quick chart check on Tata Consumers as well as some of the other FMCG companies, if you like any, if you would want to recommend any bet.
So HUL is the only one which is looking attractive in terms of a potential bottom formation. Most of the other names, Dabur, Nestle, etc., I think these stocks have still not formed a major bottom for themselves. And looking at the way these charts are structured, they are neither oversold No, nor many of these stocks have come back to their key moving averages, 50 DMA or 200-day moving averages for themselves. So that makes the case potentially that the sector would not have bottomed out. But I think Tata Consumers could be a differentiated stock here because the stock is coming out into a breakout mode. 1175 is where the stock is trading, which is confirming a 3-week, 4-week swing breakout for Tata Consumers, breaking past about the previous highs of 1155 approximately. So that could potentially indicate that maybe another 25 to 30 point up move could be something which you can watch out for from an immediately short-term view.
By the way, Reliance has spiked up to its intraday high. The stock started off just about very quiet, picked up a little bit, then again dipped. And now we're sitting almost at 29.60 thereabouts in the futures for Reliance. Not looking bad at all, ahead of its numbers later today, post-market hours. But Gurmeet, we let you go on that note. In fact, I'm going to wind it up right here and throw it across to Vinny to walk us through how the trading day so far has been.
Looking at the day that has gone by so far, obviously we have Tata Consumers that has been buzzing before ahead of its numbers that will be reported tomorrow. We will be keeping an eye out on that, and obviously Reliance today perked up a bit in trade, will be reporting its numbers. Let's watch out for that. Other than that, obviously we are seeing that the Nifty so far has actually managed to see and closing almost in the day's highest point, 22,300, 350 level. Sensex 2 more than 600 points in trade, and mid and small cap managing to hold on to gains of 0.8% is what we've seen for the markets. Other than that, we have Persistent Systems, which is a bit under pressure, and Persistent Systems is mainly seeing a bit of a fall coming in today after the commentary for its guidance was remained quite flattish, so that is keeping Persistent Systems a bit subdued in trade. So yes, keeping an eye out on that. PSU Banks, Nifty Pharma and Nifty Auto managing to see very, very strong performance today in trade overall. As of now, when you're looking at it, all the sectors are managing to close in the green, so no Monday blues coming in for the D Street, while media, metals and all of them have managed to gain almost 0.3% in trade. Looking at, in terms of the advance decline ratio also, clearly today we are seeing it's in the favor of advances versus decline. So yes, keeping an eye out on that. And in terms of the Nifty 50, what is managing to hold on to some bit of a gain today. Like I mentioned, Tata Consumers surely a strong gain coming in just ahead of its numbers tomorrow. BPCL, L&T, Eicher Motors, Hero Moto, all of them in focus. Let's pull up Lupin as well. That's the one we're keeping an eye out on after its launch of a tablet which is mainly for overactive bladder. That is something that is keeping the stock abuzz. Other than that, we also have the diagnostics names like Dr. Lal Path Labs, Metropolis, which have seen a bust today in trade of more than 2% after we did have a brokerage note. Voltas 2 in focus after we did have a positive note that came in from Voltas. So yes, keeping an eye out on these summer stocks as well as Havells, which has been trending for a while. So yes, keeping some bit of a focus on this one as well. GSPL, that's the one that is a bit under pressure after we are seeing some rules that came in on that front by the PNGRB, and that is what is keeping the stock a bit subdued in trade today. Quite a bit of a fall that we saw coming in for GSPL, down almost 19%, while even GAIL, that's seeing a bit of sentimental pressure as of now, at least because of that. So yes, we're keeping an eye out on these stocks today. Zomato is another one after the platform fee was hiked as well, so that's keeping Zomato a buzz in trade. So that's how it seems like the market has been closing at. Most of it, at least the Nifty is managing to close on with gains of more than 1% today. 22,350 levels about there comfortably. Day's highest point is what the Nifty is closing at. Sensex 2 will be closing at the positive side. So yes, interestingly, what we're seeing in terms of an up move, that the markets managed to pick up pace by the second half of the day. Strong performance coming in on that front, and even the mid and small cap managing to perform well. But yes, that's how we will be closing down the markets today on this edition of closing trades. So it's a goodbye from me as well as the team who put this show together.